Well, hello everyone and welcome back to the channel. In today's video, we discuss stock, crypto and commodities markets right now, including what just happened with this massive sell-off in risk over the last 24 hours. Yes, the Fed has something to do with it. And you know what they say, sometimes it's better not to fight the Fed. But realistically, we're at supports again and we're putting pressure back on the market. If you were a bear, you're having a good time. If you were a bull, you're a little bit sad. But it depends on which sector you were in, just as usual in these markets. Stay tuned as we break it all down for you right now. See you soon. Well, welcome back everyone to the daily recap show here for the markets closed 21st of April 2022. If you enjoy stock, crypto or commodities markets, remember to subscribe. And if you want to support the channel, give us a thumbs up on the video. Wall Street ends down. Yes, it did. It was a massive red day. Powell suggesting aggressive Fed policy. The word aggressive, well, that's a bit questionable, isn't it? Come on, Powell, what are you trying to do? Knock around the market? Actually, he may be trying to do that. But Fed Chair Powell says 50 basis point rate hike is on the table. Now, this is nothing new. The market already knew that Powell was going to do this, as in have a 50 basis point rate hike. It's pretty much an assured thing. The market's pricing that in to a degree. I think it was already selling off into this event, so it was a mixture of things occurring. Now, you could disagree with that, but realistically, this is just what Wall Street wants to do, and here's the best storyline to do with it. It sold off a resistance on the Nasdaq, and we'll take a look at that later. There was a really big trap that happened in the first hour of trade, and again, if you start to understand and you can react to these traps during day trading sessions, you may do better, so we'll check that out soon. Let's talk about Q1 earnings so far though. Are they as bad as everyone makes out? Well, beat rate currently is at 78%. Beats 122, misses 35. Not too bad in some ways, but we haven't seen the big tech yet. That comes next week. Microsoft, Apple, Amazon, some of the big heavy hitters. This will be a massive week, so make sure you subscribe to the channel because it's going to be a crazy time, I can tell already based on what those earnings results show us. Some bright lights did occur though, so let's take a look at that just soon. And as we mentioned, the first hour or the first half an hour here, it went bullish and the market went bullish in a big way. And that was then followed by just selling and selling and selling all the way through the session into Jerome's speech. And they kind of just consistently sold it all the way into the close, into supports. If we take a look at the sectors, there were some bright shining lights, as we mentioned. Jets, one of the sectors that we've been heavily discussing here for the last 2 weeks. Massive rotation going into it. Great result there from some of the airline companies, and it was the only sector really up on the day. And I guess it deserves to be because that's exactly where you could see the money flow going to. Remember, it's not always about tech, guys, and unfortunately, owning tech through 2022 so far has been brutal, and possibly it may even get worse, especially if the big tech stocks fail. Remember, Apple is holding up amazingly well. Imagine if that failed to, or it missed on the earnings. My goodness, it would be pretty wild. Let's talk about something that was interesting though, and definitely different to the norm. And that comes down to metals and mining and gold. And even energy was selling off, specifically metals and mining. So these sectors are coming into earnings with some incredible expectations. If you look at some stocks, some of them are up 70, 80, even 90% coming into earnings. Now, I don't know whether they can hold up those earnings results, and that's the problem. Could this become a broad market sell-off? 2022 so far has been all about tech getting sold off. But will it be a broad market sell-off across most other sectors? Remember, if you don't have metals and mining going up every single day because of inflation, and the Fed saying, oh, it may have peaked, inflation may have peaked, but we don't know it, does that cause a real nightmare here on the SP500 and Nasdaq and the double dip that often does happen during midterm election years that we've discussed? That's really one of the big calls there. It looks like Snap missed, but I think the stock held okay after hours. We'll see how it ends up opening. And we've got another big one on the Friday open, which is American Express. But next week earnings, that's where it's all, and that's everything that it's all about. Now, in terms of people talking about in some type of recession coming to the US or this being bigger than maybe it will be, I'm not so sure about that. I think this is a fairly relevant chart. I'll bring it up just quickly. Remember, this is the percentage of US Treasury yield curves that are inverted. And in general, you see before recessions now for a very long time, 50% plus of all those yield curves inverting. That hasn't happened at this stage. Now, you could argue that's because the Fed is so behind on policy that they're not even close to getting it to the right rate, but certainly something to watch here. And we'll continue to bring this chart up sometimes during the next couple of years, so you guys are reminded, because I think that's a very, very important area here for us to remember in these markets and to understand. The VIX, the volatility index, of course, fear was rising. A huge amount of puts entered back into the system. We'll talk about that soon. And if we move over here to the US 10-year, this was more bad news for the technology sector. 10-year didn't decline. We still haven't seen the lightning bolt to the downward side. That is a peak, a trough, a lower peak, and a lower trough. When that happens, maybe you can start to move into technology and say, okay, the risk is getting less for me to buy tech. At this stage, we're going towards that 3%, and it looks like the US 10-year wants to hit that level. This is a bit of a resistance zone for it though, so expect the US 10-year to hover here soon, or at least we hope it does. What I think the surprise for the market is this one, the 2-year. The Fed comes out, they say stuff about policy. Let's see what the market interprets it as. That's going to be doing better than us at figuring out what the Fed's really saying. And the market didn't like it. They kept pushing the 2-year up even higher. It's now sitting at 2.75. So that's another massive increase in the 2-year. And as we know, again, technology and the markets don't necessarily like this. But part of the stats that are out there, everyone, just remember this. Part of the stats are when the Fed actually rate hikes, the market often turns around and goes positive. And people scratch their head and they say, oh, why does that happen? It's because the sell-off occurs into the rate hike. So remember, the stats are very positive usually after the rate hikes for markets, but that's because they sell the rumor. They sell all of this speculation coming into it, and then when it happens, they reverse, just like they reversed in March on us. That's the kind of concept we had in 2022 so far, and I still think it is playing out here to a degree. Now, we mentioned PCC put-call ratios were increasing. Absolutely. Look at this large number of puts that was put in the market. Maybe a lot of these are going for Friday expiry, so that could be a super interesting level for you to be looking at throughout the Friday day, seeing where all the big strikes are going to be sitting for the SPY, the QQQ, etc. And yeah, put call ratio much higher, showing a decent amount of puts were entered into the system over the last 24 hours. Let's move over to the DXY. It bounced thanks to Papa Powell, meaning that it's a bit of risk off. If the dollar index is rising, often that can mean that smart money is taking money out of the markets and putting it into a liquid asset, being the dollar index. And as we know, the US dollar is also a bit of a safe haven, so money is flowing into it from that aspect. How did this serve gold? Well, it wasn't too bad. Gold actually held up, and it created a tweezer here in the 4-hour. So you'll notice we have a bullish rejection, and a follow through. That's a good sign for gold traders. And if you're looking for it to go bullish, of course, breaking past this 1960 level is going to put a double bottom in place and resume that upward trend that really broke through at this point over here. Could it happen? Absolutely. Is that a better trade than sometimes the market? Sometimes it is. I mean, these types of positions are coming off the key zones. You think about it, gold has bounced off the previous resistance lines, which are all over these closes. You put it on a line chart to really exemplify those closes. We've got the tweezer over here. Things are looking better all of a sudden for gold, and it's starting to really look a lot nicer. Remember, gold versus other currencies can be the best bet. If the US dollar is strong, gold versus yen has been an incredible one that some people in the community have been messaging me about, and I don't blame them. It was a very smart, well thought out decision. Let's move over to oil. Oil is holding its own. It's kind of breaking above this 104 area, and then it's consolidating through there. Let's look at the daily chart, just have a quick look at this. It looks okay. Long leg doji, no close above the high of the doji at this stage, so it's not really a decision made to go bullish. But oil is holding, I would guess, okay in this current market condition. Let's move over to the surprise, and that was, of course, jets. Well, for some people, it was a surprise. Really nice earnings result here from UAL. And as we saw, massive trough, peak, high trough, huge amount of money flowing in here, a monstrous max pain kind of scenario down in the bottom at this area, and a downward trend that's now been breached above. So are there people speculating on the travel index? I would say yes, they're basically moving into this idea that people are paying for services and the travel trade is to a degree on. Obviously, you've got to be very risk averse here. Earnings have come out for most of these airlines. on the surface, it looks better, and that's why it's holding up much nicer than the other sectors in the market. Let's move over here to some other sectors that aren't holding up so well. Semiconductors comes to mind. Now, a lot of people have been making a big deal with me about this being a head and shoulders. I'm not huge on taking bearish head and shoulders because I think it's harder to short in the market than it is to long for most people. It's obviously, if you short, you have to have slightly different scenarios and slightly different setups. But look, we're back on the support here for semiconductors that we hit back in March, that we hit during the lows, and things like Nvidia are trading at $200, which we've long argued is a great stock with a really high valuation. The market is pressing anything that has high valuations. It's all about that. That's really what they're punishing down. They're just saying, get rid of all the froth in these markets. And in some ways, that plays into what the Fed wants as well. So semiconductors on support, you have to really look at that and say, do I want to take it? Or am I going to look for some kind of lightning bolt turnaround, double bottom on the smaller time frame, whatever it might be, some type of buy signal. A lot of volume, a lot of transactions, super critical point. Let's take a look at the DAX. So we've been looking at the DAX from risk on, risk off assets, and it rejected in a massive way. I mean, it ended up creating a giant shooting star on the daily off the resistance of 14.6, and it just sold straight back down. Not really a great sign when you're looking at something like the DAX and it's doing that, but certainly one that we can check out. Let's look at IWM, another one that sold straight back into support. You can see what's at stake here in the Friday and Monday sessions next week. It all comes down to earnings. Clearly, this market, that's the problem with trading. Sometimes if you trade into earnings, it can be very, very sporadic, and sometimes it may not make sense to you because the market is doing all these crazy calculations in the background, trying to figure out what the new fair value of the market is based on every single data input. It can be very fast like it is right now. Let's move over to the Nasdaq. So the Nasdaq sold off the resistance, and this was the fourth touch too. Look at this. They sold off the resistance straight on that 265. So hopefully not too many people entered the bull here, I guess. And it just went bang, straight back down into support. And it actually closed a little bit under that. And at the time of this recording, it's even a little bit lower again. So is this signaling all the way back down to 13,000 kind of 100? I mean, that's the argument that most people are making now. And I don't blame them for making such an argument. Down under this level, if we do break under this, oh, watch out. Because in history, if you go back and you think about what that's generally meant, it's generally meant a 200 SMA. That's what's happened several times in the past for the SP500. It's gone really deep once it smashes through that 50 in the low again. So we need to be careful about that. Hopefully it doesn't happen. I'm sure a lot of people are a bit scared of that kind of thing right now. If it closes this weekly like it looks right at this stage, that's certainly another negative here, another thing chalked up. But really, this is mostly about earnings. If earnings can't come to the party when the big ones, Apple, Microsoft, everything else happens, we're not going to get too much clear direction. I think for a lot of people, clarity is going to need to be found there. Do we sell the rip right now? I do think there will be sellers if we do rip up, and I would expect probably the Friday session to try to rip around, fire some buyers, and then of course, maybe that's where the sellers come back in. You've got to be very careful, but you're really targeting now that selling of the rip that is occurring at this stage. Let's move over to the S&P 500. It closed on support. So this is the market that I would usually use as more of an indicator of the general health of the US. And it went up and it got so close to that 45.20. 45.20 was the target after it broke through here. It rallied in the morning. It stopped at what, 45.13-ish, 12.13, and then sold off and just kept selling. And if you look at this on a 1 hour chart, you'll notice it just goes bam, 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 bam. So it didn't happen before Jerome's speech. It just kept going. And he was just part of the catalyst. So we sold into the support. This is where you hope rallies happen. And I think really a lot of people are going to be targeting bull moves on the Friday. And again, it comes down to the options. If you think about it, Max Payne sitting at 445. So that is a little bit further away here. We're sitting at 4,400 or just underneath at this stage. If it's going to go up to Max Payne, it's got a pretty big rally in it. And I'm not sure if it can get that much done, but certainly that's where the Friday at this stage looks to be having. If it closed underneath these lows, we've got a big weekend video to discuss, because at that point, everything really changes in this market. And all of a sudden we go, okay, every single sell the rip continues to happen. That's a huge weekly rejection at that point. You can see it here on the charts. Massive weekly rejection. New low formed. You've just got to think that these markets are coming right back down. 4,300, 4,200, and underneath that, potentially that weekly 200 SMA. That would be pretty brutal for a lot of people out there, and unfortunate indeed for the markets. Let's talk about Bitcoin. Look, are we in a crypto winter? Most of that comes down to risk on, risk off. Bitcoin looked really great over the last 24 hours, and it suffered due to really, I think, the stock market more than anything else. At this stage, we're kind of in this point. Obviously, there could be more pain to come between that 900, 1,000 days. Historically, very bad after the halving event. We'll continue to just bring that up so we've got it. And Bitcoin's currently still holding the downward trend. So this is really all that super support. It rallied through that resistance. So this is the 41.5. And at that point, it looks set to go towards 45. It stops at 43 because of the stock market and then just gets tanked. I mean, that's really what happened. The stock market stopped you here. And you can kind of tell because you look at BTC shorts, it's not like the whales were coming in and placing any more shorts. In fact, they were reducing positions, which is usually a positive sign for the Bitcoin position. And Bitcoin held up the best. I mean, really, you look at it versus Ethereum. Ethereum's back on support. They all look bad on these candles. If you want to stay out of these markets, I wouldn't blame you. I mean, it's really all about earnings. And sometimes that's a risk that are you willing to take? Is it more of a gamble? Is it an educated guess? You know, what are you doing in these markets? Clarity is something that we talk about a lot here. And sometimes you have it and sometimes you don't. But when you know bigger news is coming forward, and if that news ends up being positive, you can kind of see the knock-on effect. Think about the banks so far in earnings season. They've held up relatively well. Think about the airlines. They've held up really well. Each one has been reporting really, really well. And that's pushed jets to being one of the best performers over the next 2 weeks, or last 2 weeks, I guess it would be by now. So some exceptional kind of trades there and ideas, but really it's just about getting clarity and knowing where that money flow is and whether you can see something that makes sense and is going to follow through. At this point, most of these markets are confused. They're waiting for that big bit of earnings news. And I think there's caution in the air from that perspective. If you haven't already, come and follow us at FX Evolution on Twitter. We're getting close to 5,000 followers. Thanks to you guys. So thank you so much. And in terms of news for the end of the week, there's not really that much coming out. So Fed Powell's done the damage. Obviously, they say don't fight the Fed. At this stage, it looks like tech just continuously gets hit and there isn't really much respite for it. Will Friday rally? A lot of it has to do with whether they want to make maximum profit off options, but that doesn't necessarily mean that we're out of the woods yet on bearish movement. It's all down to the earnings in the next week. Thanks so much. Subscribe if you enjoyed today's video, and we'll see you in the next one. Bye for now.